And I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Hello everyone, this is Ahmed Shawab Liquidity Club. Today is Sunday, the 6th of August 2023. I'll be doing the week review, so let's dive deep into it. Starting with the DXY. Last week, we traded higher to the mean threshold of this bearish order block, and then we traced and closed inside this weekly fair value gap. So looking at it from here, we have filled this fair value gap fully, and now we have this small inefficiency in marketplace where it has been created by last week trading. So next week I'll be looking for this fair value gap to be filled, and then if that happened, then we'll be looking for the buy side liquidity filled, then this buy side liquidity, or else after we fill this inefficiency, we start trading lower. So it's still indecisive for what the DXY is still trying to do. Going to the daily chart, as you can see, this is the highlighted range and this is the equilibrium. We traded to the extreme of the premium, reached to this fair value gap, filled some of it, traded to the weekly inversion fair value gap and traded lower, closed inside this weekly fair value gap. So as I mentioned, I'll be looking for this small inefficiency to be filled next week, and maybe trading to the consequent encouragement of this wick, premium wick. Going to the ES, this is the weekly chart. As you can see, last week we traded lower, filling this fair value gap and trading to the high of this bullish propulsion block. At the moment, we're still holding a buy program bias. We're still looking for higher prices. It doesn't give me any signature on price that it wants to trade lower. It's just a retracement to a discount array that will allow and permit price to trade higher to the buy side liquidity pools that are listed above here. The rejection block, as I've highlighted, and the buy side liquidity. You could also highlight the consequent encouragement of this premium wick because it's a long wick, and if it's a long wick, your eyes immediately goes to the consequent encouragement of the wick, because wicks, we consider wicks as gaps. So yeah, pretty much I'm still holding the bias as a buy program. I'm still looking for high prices. Breaking below these lows here will change my bias and my narrative to start looking for lower prices as I've entered the sell program. Going to the daily chart, as you can see here, we filled this fair value gap fully on the weekly chart. On the daily chart, you can see you have more fair value gaps to fill. We have this fair value gap and this fair value gap. We have this bullish order block that got reacted from this bullish order block to the upside. We started consolidating here, and later on I'm going to show you the NQ, how it has created a lower high here, whereas in the ES it has created a higher high. How is this important? I'm gonna let you know once we reach to the NQ analysis. So we traded lower, price retraced. We have this bearish order block. We have fair value gap, price retraced to consequent encouragement of this fair value gap. I'm just eyeballing it and traded to this bearish order block, and then we traced lower. So if it still want to show us the bearish institutional order flow on the daily chart, whereas on the weekly chart we have a bullish institutional order flow, it's a low probability condition, so it's better for you to stay away from the marketplace. However, this can be permitting price, this bearish institutional order flow on the daily chart that can permit price to reach to maybe the propulsion block, which can send price higher. That's pretty much it for the ES. Going to the NQ, as you can see here, the same weekly fair value gap that was created on the ES. NQ has traded past this weekly fair value gap and fell short about 5 handles from the opening of this bullish propulsion block and retraced a little bit and closed there. So for the next week, we might be looking for this sell side liquidity and the sell side liquidity, the consequent of this wick. Why? Because price goes from since we have traded and took this high, we have an outside candle where we have last week it was it has a higher high than the previous week and a lower low than previous week, so it has swept both the highs, the buy side liquidity, and both swept the sell side liquidity. So pretty much there is nothing to be swept at the buy side, and we have filled this fair value gap, so it's later gonna be reaching to the sell side liquidity. As I mentioned, price can either gonna go up for sell side or for the buy side liquidity or an inefficiency that is listed above the marketplace, or below the marketplace for inefficiency or a sell side liquidity that is found below the marketplace. So for the last week, we traded higher, taking this buy side liquidity, reaching to the consequent encroachment of this wick. As I've mentioned, we consider and treat wicks as gaps, and then we traded lower, filling this weekly fair value gap and reaching to the falling short of reaching to the bullish propulsion block opening price. So later on, we have this area right there that would be significant to me. If we trade lower than these levels, I'm gonna be considering that we've entered the sell program, and I'm gonna be starting looking for lower prices. If not so, I'll be looking for higher prices, but as I've mentioned, it's still indecisive for me. It's a bit of a hard reading for me. I cannot get an easy read on what price is going to be trying to reach to at the moment. But I've mentioned what I'm looking for in price. Going to the daily chart, as you can see here, on the ES, price has created a higher high, whereas in NQ, it has created a lower high, created a lower, fair value gap, retraced, bearish order block, filled some of this fair value gap, traded to the bearish order block, and then traded lower, closing roughly at the low of this weekly fair value gap that's found on the weekly chart. So how is that in SMT important between the NQ and the ES? So as you can see, ES has created a higher high here. So if, let's say, we started trading lower and we've entered the sell program, I'll be looking for the NQ to be the leadership. Why? Because it has refused to make a higher high, which means it's heavy to go for the, it means it's heavy to reach for lower prices. So if we started trading lower, NQ would be the leadership, and it's better for you to take trades in the NQ because it's gonna have more exaggerated and more aggressive moves to the downside when compared to the ES and the Dow. I'm gonna be sharing more insights about it once we finish the Dow analysis. So anyway, as I mentioned everything about it. So we still have a bit of fair value gap here that's resting above below at the small inefficiency here that we still didn't price to it, and we have this low and these lows here that we might reach to. Going to the Dow, as you can see, Dow last week I mentioned that we traded to the buy side liquidity that is found on the weekly chart. You can go to your charts and you can type YM1 exclamation mark, and you can see the Dow continuous contract. We're using the continuous contract to show us more data when compared to the current month contract, which is September, which is YMU 2023 you cannot basically see much of the data that's found in the history. So we navigated to the continuous contract. So as you can see, last week we swept the buy side liquidity. We have small inefficiency. You can go to your charts and you can see it. We have a retracement to the weekly fair value gap that was created as a result of the last week trading, and then we have this bullish order block. So it's very normal for price to retrace after it has a long run to the upside. Why? Because now it's an extreme premium. It's gonna be repricing to discount. So if you take this low to this high looking for discount, it's gonna be roughly about here. So it might reprice to the bullish order block and maybe the mean threshold of the bullish order block that can permit price to reach and trade higher, reaching to the small inefficiency and this buy side liquidity relative equal highs that are just recently printed into the marketplace. So and that's if we continue and resume in the buy program. Whereas if we seen some signals and warning in the other averages that we're gonna be starting to trade lower, and we've entered the sell program, I'll be looking for this as sell side liquidity, and we're gonna be running for this sell side liquidity, the consequent attachment of these wicks, and such on. Going to the daily chart, as you can see, it's very normal retracement. We have this small inefficiency, the fair value gap, price trades to it, filled completely the bearish order block. It has traded to the bearish order block and traded lower, closing there at roughly at the fair value gap. So we have small fair value gap here. That price might be, since we have everything efficient here, there's nothing inefficient. The fair value gap is efficient. We have no fair value gap here. So that's pretty much it. There's nothing inefficient here. We've fully filled every fair value gap here. So what's the next move? Price is gonna be going from the buy side liquidity to sell side liquidity, from sell side liquidity to buy side liquidity, from discount to premium, from premium to discount. So it has price to premium, it wasn't premium, move to discount. Now we're gonna be seeing perhaps a move below this low, which would be deemed as the sell side liquidity, and this fair value gap that is found the inefficiency. Going to the Euro USD, which also known as the fiber. This is the weekly chart. Please ignore this bullish breaker because it's highlighted on the daily chart, which I'm gonna be talking about soon. We traded lower last week. We've seen some reaction. Previous week, we traded to the bullish order block, and we've seen some reaction. This week, we traded to the mean threshold of this bullish order block, and we've seen some reaction. So coupling this analysis with the DXY, it's still very indecisive for what price is going to be reaching for. So we have small inefficiency here that was created as a result of the drop down. So price might actually want to reach for this inefficiency, perhaps fill it, and maybe reach to the consequent encroachment of this wick, discount wick. Or it can do the opposite. If we are really in a buy program, price can open on next week, trade to the consequent encroachment of this wick, and then trade higher, reaching to this inefficiency or this fair value gap imbalance. If we're entering into a sell program, one of the signals would be we trade higher on the beginning of the week, trade higher to fill some of this fair value gap, and we traded lower, reaching to this consequent encroachment and trading below it, and treating it once it trades below it, we treat it as resistance. So either or, once we trade on Monday, Tuesday, we will be seeing and be more assured of what price is going to be trying to reach for, not just for the next week, but for the upcoming weeks. So next week is actually very important for what price is going to be doing. Going to the daily chart, as you can see, this is the bullish breaker, have low, high, low lows, high, high. So this would be deemed as bullish breaker. We've seen some reaction at the consequent at the mean threshold of the bullish breaker, and then now roughly the low of the bullish breaker, and we've seen some rally to the upside. That's pretty much it for the euro. I've shared my analysis. Going to the pound, this is the weekly chart. This is the pound USD, also known as the cable. This is the weekly chart. As you can see now on the weekly chart, it was more aggressive move and more exaggerated move to the downside here. We traded roughly to the consequent encroachment of this wick. We were trading the whole week roughly inside this bullish breaker. So we still have the sell side liquidity that is still untapped yet. Let's go to the daily chart. As you can see here on the daily chart, price is showing us here the bearish institutional order flow, where it has been respecting the up close candle and it's deeming them as the bearish order block, and it's swaying through the down close candle, reaching to lower prices. As you can see here, we traded the consequent of this weekly of this fair value gap, and we traded lower price on Friday, which we had NFP, non-farm payroll. Price failed this inefficiency, trades to this bearish order block, and then we traced and traded lower a little bit. Notice how price is reacting and respecting this fair value gap. So that's pretty much it for the pound. I'm still indecisive. I want to see what price is going to be trying to do in the DXY and the other markets. Generally, the August is low volume month, as I mentioned in the last week review. So it's better for you to just stay pre and study what price is going to be trying to do. For me, it's a bit of a hard reading this week, so I'm going to be journaling and studying what price is going to be doing, so it would be easier for me to encounter these environments in the future. So that's pretty much it for this weekly review. I hope you learned something from it, and until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.